financial accounting fundamentals or basics. And the past video is determine the depreciation, and the one videos before we determine the basics of accounting, and this video is going to explain the actual or cash basis accounting, because every accounting section is holding the main thing is cash, that is the flexible for anything and everything and anywhere. We know about this, and we will see the what is the accrual basic income and cash basis income. First one, we're going to see accrual income, that is the recognized revenue and expenses when they are incurred ridiculous of cash transactions, that is right. In every cash transactions is incurred, it is then expenses and affects also revenues, and this is the standard of most business. It is right point, mark this. And cash basis accounting, this recognize the revenue of expenses only when cash is received or paid. This is the very important things, because we having all accounting transactions is based on the receiving and paid, or else receipts and payments. Your flexible thing is expenses and incomes. You all know this about this. I hope this cash basis accounting and accrual accounting is this little bit summarized, and the main thing is fundamentals of financial accounting is a double entry system. We all having two entries, and I'm going to just recall this two accounts, because every accounting sectors and every accounting standards will going to maintain the double entry system. This is the most fundamentals of principal accounting. Yes, we have no alter thing like this. In every financial transactions affect at least two accounts in opposite way, that is called debit and credit. In accounting system, not running that cycle without debit and credit. For example, if a company purchased equipment, assets, or increase and liabilities, if financed by a loan or equity, if paid in cash, decrease. So that is the called. What is the debit? What is the credit? Means liabilities is going to the increasing our expenses level, and assets is going to describe decreasing or standardizing the our asset level. What is called that debit? What is called that credit? Is a single entry, sorry, double entry system is can't running this debit and credit. Double entry system is very mandatory for a debit and credit. Debit is means increase assets and decrease liabilities or equity. Okay, and then credit assets and decrease liabilities or equity. This is the two main thing, increasing, decreasing. What increasing and what decreasing, that is the manual. Just I recall, listen carefully. Debit is increasing assets and decreasing liabilities. Credit is decreasing assets and increasing liabilities. That's it. Hence, breakdowns of the key components of basic accounting equations. We discussed about the credit and debit, and we discussed about the double entry system, that is the main manual of financial accounting basis. Hence, breakdowns of key components of basic accounting equation is called. The functions of financial accounting lies in the basis of equation is more important is asset. So we know the asset, then what is the probably problem we going to in any problems we need to know the asset. It means we will definitely do this formula, and what is that means liabilities plus equities. If I have liabilities, if I have equity, I am going to add that both I will going to take the assets. And the another one is we have the alter options of, or automatically we going to add the not only equities, also liabilities or shareholders, but anything, but every asset, even the cash also. If I have a cash, I am going to add the liabilities. That is the overall of assets. And what is the meaning of assets and liabilities and equities? This is the main important thing for this formula. Then assets is resources owned by the company. Yes. If I run the company, what I own, that is my asset. For example, cash, equipments and buildings. This is all my assets, because upcoming years I'm without not continue my business without these segmentations. And the liabilities, obligations or debts owned outsiders. Yes, my obligations or debts in the outsiders peoples, or else what I have the responsibilities of from others, that is called the liabilities. For example, if I receive the loans, that is my liability. If I receive account payable for someone, that is called my liability. As like this, we know the clarifications of assets and liabilities. The main thing of assets and the growing helpful for the some probabilities is called my assets. What are my responsibilities called? That is my liabilities. This is the mandatory for every year balance sheet. And the another thing is equity. And what is, and then we discussed the assets and liabilities for knowing the assets formula without the equity. And now I am going to end this video. I hope this video is very helpful for you. We will see the next video and I will catch you later. Thank you.